Hello, good morning to all. Welcome to today's daily dose of market insights brought to you by OANDA, presented by myself, Kelvin Wong, the senior market analyst of OANDA Asia Pacific. So very good morning to you all. Today is Tuesday, 10th of October. All right. So before we start, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. Any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so now let's get started over here. So as usual, this will be the three key takeaways for our daily dose of market insights. Firstly, will be a recap of key events and highlights that take shape yesterday. Then as well as what are the key events or economic data to look up for today. And lastly, we will sum up with a short-term technical outlook on the various asset classes that has started to kind of exhibit interesting configuration across the broad-based asset class like stock indices, FX, and as well as commodities. So let's get started. What happened last night? Or talk about the US session. So what you could see over here is that throughout the European session, the US session, we start to see WTI crude oil prices, be it Brent crude or WTI, as well as gold prices, spot gold XAU/USD, continue to get bidded up. So bullish bias still remains intact throughout yesterday's session. So it seems to us that over here is that there is some potential short-term momentum coming back into WTI crude and as well as gold prices given yesterday's price action. But however, there is certain key levels that we need to watch out for in the very short term to maintain this short-term bullish bias, which we'll highlight later on in the short-term technical outlook. All right, so over to the FX market over here. What you see over here is that FX market is rather mixed at this juncture in point in time. So overall, the dollar seems to be pretty much sideways. But what's interesting over here is that the dollar starts to lose its strength against the Japanese yen. Potentially yen could be seen as a safe haven currency as well in terms of turmoil, like what took shape over the unfortunate turn of event over at the Middle East region due to the surprise attack on Israel. And as well as interestingly, the dollar strength is not also prevalent against the Chinese yuan, which actually seen a kind of a spillover effect towards the Aussie and the Kiwi as well. Okay, so lesser dollar strength that has been seen in this China proxy currency. So one of the reasons potentially why the China currency is much more stronger against the rest when talk about dollar as a conduit is likely because of a potential intervention coming into play by PBOC to actually watch the dollar CNH rate, and as well as also anticipating of better inflationary numbers coming out from China this Friday. Okay, so we'll talk more about this inflationary number on Thursday, right? During the Thursday daily daily dose of market insights. All right, then over at the US. Okay, so let me share with you what happened in the US over here. So for US, right, what we could see over here is that the US stock market actually closed relatively positive in the green or in positive territory yesterday. So all in all, right, the benchmark US indices all the way from S&P, the four benchmark indices, the S&P, the Nasdaq, the Dow Jones, the Russell 2000, on the average, they actually managed to trim off earlier intraday losses. So they have the earlier intraday losses of close to about negative 0.5% on the average. So on the average, all these four benchmark indices might have closed between positive 0.5 to positive 0.6%. So what I could see over here is that yes, the mega cap stock managed to actually close in the green as well, with the exception of Nvidia, which is negative 1.07%. The bulk of the rally come from the energy related sector, which actually outperformed the market. ExxonMobil plus 3.5%, Chevron plus 2.7%. But however, the energy sector only form a very small portion of the S&P 500. So despite their very strong performance, sector performance, it cannot be translated to a much more substantial gain in the S&P 500 due to its smaller weightage as compared to the technology sector. Okay, if you look at very clearly, how do you see the weightage? You just look at the the size of the square box, the size of the boxes. So for sure that look at the size of the box, much more smaller compared to the box of the technology sector. Okay, so one of the reasons also led to this yesterday's, what you call it, minor bullish reversal that was seen in the US stock market is due to the fact that there is some encouraging Fedspeak. That means Fedspeak is actually public speeches made by Federal Reserve official. So I just use the word Fedspeak. So some positive Fedspeak from Fed official Logan saying that the current higher yields at this juncture. So higher yields means the current longer dated US Treasury yields may mean less need for hikes. So that actually tell us that some elements in the Fed are rather dovish. So as you all know that news, right? Some media, they need to have some kind of form of news to actually support their reporting. But what's interesting over here is that the movement on the S&P 500 yesterday come as a much lower volume. So what you could see over here is that if I draw on the chart of trading view very quickly, so this is S&P 500. All right, so what we could see over here, right? Yesterday bounce. Okay, this bounce on the S&P 500. The volume is much more lesser. So the bottom of the chart is my volume. So, okay, let me maybe hide myself for a while. Yeah, so that you can focus more on the chart. Yeah, so better. So okay, so look at the volume over here. The volume has much more decline. So this volume, right, is the lowest volume since 26th of September. All right, and way much more lower than last Friday bullish reversal bounce exposed NFP. So what you could see over here is that in terms of volume and price action, the volume is not justifying this sustained recovery or yesterday's S&P price movement. So later I'll share you the technical chart of the Nasdaq 100 and as well as the Dow Jones that we will do it in our usual daily dose of market insight. In fact, yesterday rally hit right at that short-term pivotal resistance that we highlighted on Monday. All right. So without further ado, since we're talking about the stock market right now, so before we go into the daily dose of the market insights, right, let's look at the data. What data to look out for today session. So for today will be Tuesday. So what we could see over here is that currently there is no, okay, so one of the economic data that's releases earlier on in the Australia side of the story is the consumer confidence data, Westpac Consumer Confidence data. So what I could see, yes, they rose to positive territory back again for the month of October, 2.9% positive from previous month of negative 1.5%. So that could actually also explain the current today's resilient Aussie dollar against the USD. All right, then similarly to the business confidence, almost unchanged at 1 versus the previous month of 1 as well. That's for September. So if we go out for today's session, it'll be relatively quiet. So we have as usual monetary policy, key monetary policy official speeches. So at 8 p.m. Singapore time, you have ECB President Lagarde's speech. That at 9:30 p.m. Singapore time, you have Fed Bostic speech. So more of a what I call speeches from monetary policy, from key figures of major central banks. All right. So in terms of economic data, will be not at the moment in time. Okay. So now what? Now translate to the short-term technical outlook. Okay, so let's start with the benchmark indices first. All right, so benchmark indices, that starts from the US side of the story. So from the US side of the story over here, let's look at Wall Street first. Okay, so Wall Street 30 over here is that this rally over here. So this rally actually took shape right hitting off the key short-term pivotal support resistance level that I highlighted at 33,700. So we will still maintain this we call it a short-term bearish bias condition for the Dow Jones Industrial Average, which is the Wall Street 30. So on the support, I'll be adjusting a bit on the downside over here. So the intermediate support level to watch out for was yesterday's former swing high on last Friday, now turns into a pullback support level. So this will be the first support level to watch for today. Will be at 33,510. So a break below 33,510 potentially could see us exposing or a potential further slide in short term towards the next support level at this 33,160 level, which is the former, very clearly the former range resistance broken, turns into a pullback support tested yesterday. yeah, tested yesterday. Okay, so it came down yesterday before shaping that minor bullish reversal. So for sure, these are the two short-term support level to watch for today. Keeping below still maintaining that short-term bearish bias condition below 33,700 key short-term pivotal resistance. So however, if we start to see a clearance with hourly close above 33,700, then this counter trend rebound should potentially extend to the next resistance level, which is at the close to the 20-day moving average, and the 20-day moving average area at 33,935/34,055 level, this region over here. Now, Nasdaq 100. So over at the Nasdaq 100, very similar situation as well, where the price action managed to react off yesterday's we call it a support level, which is at 14,805 very closely before reversing upwards, and now stalling right below the 15,140 key short-term pivotal resistance. All right, that we highlighted yesterday. So all in all, right, what we could do over here for today, we're still maintaining that short-term bearish bias. Then the support level to watch out for today, we firstly at this 14,990 level, this level here, which is close to the 20-day moving average that was taken out yesterday. Then a break below 14,990, potentially you could see a retest down to the 14,800 level that was kind of tested and held yesterday. So these are the two key short-term support level to watch. So still maintaining that short-term bearish bias condition, holding below the 15,140 key short-term pivotal resistance level on the Nasdaq 100. But however, if we start to see a clearance above with an hourly close above 15,150, then potentially this short-term counter trend rebound will extend to test the next resistance, to test the next intermediate resistance at 15,355. So what's 15,355? Is actually the descending trend line resistance that is in place since 19th of July high. Right, so that's for the US stock indices. So very quickly, going over to the German 30 index. So German 30 index still pretty unchanged. So the price actually managed to rebound, but still didn't surpass the 15,330 key short-term pivotal resistance that we highlighted yesterday. So still maintaining that short-term short-term bearish bias condition, short-term bearish bias condition for the German 30 index below 15,330 short-term pivotal resistance level. So for the first support level to watch out for today will be yesterday's minor swing high area over here. Broke out, turns into a pullback resistance at 15,165. Okay, so a break below 15,165 potentially could see a retest at the 15,020 level over this. So these are the two key short-term resistance to watch for today. 15,165, break below it exposes 15,020. However, if we start to see a clearance above, a clearance with an hourly close above 15,330, then this short-term counter trend rebound will potentially extend to test the next intermediate resistance level at 15,560, which is the congestion area over here from 25th of April all the way up to 22nd of April, turns into a pullback resistance and also close to the 200-day moving average acting as resistance as well. Right, so still maintaining that short-term bearish bias condition on the German 30 index. Now over at Asia will be the Hang Seng index. So over here the Hang Seng index actually yes, this morning it did a squeeze up, but it actually reacted off, did that expected bearish reaction of that key short-term pivotal resistance that we highlighted yesterday, 17,910. So yesterday we actually have a short-term bearish bias on the Hong Kong 33 index. So no change given the fact that we start to see a bearish reaction right exactly at the 17,910 key pivotal resistance level. So this is indeed a key turning point for the Hong Kong 33 index. So for sure 17,910 key pivotal resistance, still maintaining that short-term bearish bias. First support to watch out for will be 17,680. A breakdown below this 17,680 potentially could take us down lower towards the next support level at 17,310. Okay, however, if we start to see a clearance with an hourly close above 17,910 level, then we could start to see a extension of this short-term counter trend rally towards the next resistance at 18,300, which is so confluence with the downward sloping 50-day moving average on the Hong Kong 33 index. Okay, now moving on to the FX space over here. So over here, if you look at the FX space, looking into the 1 month rolling correlation, 1 month rolling 1 month performance as of today. So this is a very broad-based look. Immediately, one look at this chart, you could see how the dollar performance against the major currency. So yes, the dollar since the high of 4th of October, dollar strength has started to dissipate over here. But the dissipation of the dollar strength is more prevalent against the CNH and the CNH, the Kiwi, the CAD, due to the fact that CAD is actually right now getting stronger against the dollar due to the resilient upbeat mood, the resilient push up in oil prices due to the geopolitical risk premium factor that is coming into the market, and Aussie dollar as well, because the fact that Aussie and Kiwi is seen as a proxy against the CNH and followed by the Sing dollar. So a bit sideways for the Japanese yen. So the dollar Japanese is actually going to plunge as well since exposed NFP data releases. So what we could see over here is very interesting. Over here is that perhaps we could look at some crossplay that involve in the Aussie dollar, which is strengthening, and against some of the European currency. All right. So before we talk about the crossplay over here, let's look at the major currency first. So the major currency pair, we talk about major, that means talking about with the dollar inside over here. So let's start off with the euro dollar. So no change on the euro dollar, right? Yesterday we have a neutral stance between 106.30 and 104.90. So still continue to maintain this sideways neutral stance on the euro dollar, as price could trade sideways. Despite the fact yesterday it did bounce off, and it bounced off from the lower neutrality level, but didn't surpass 106.30. So continue to see this potential sideways range trading between these two neutrality range for today on the euro dollar. Then very similar for the sterling dollar as well. So on the sterling dollar over here, the neutrality level that we have for yesterday is 122.70 and 121.65. Price action going to be kept between these two levels. Yesterday price managed to come down, the sterling sold off, but managed to bounce off against the lower neutrality range that we highlighted yesterday as well. So no change, maintaining that neutrality stance on the sterling dollar between 122.70 and 121.65. Right now for dollar CAD. So yesterday, still recall that we do have a bearish bias on the dollar CAD to further inch down lower towards 1.1355. 135.55. So what we could see over here is that the dollar CAD right now is fast approaching this 133.55 level, which is so close to the 200-day moving average. And this is the hourly chart. So still recall that over here is that what we could see on the dollar CAD over here is the in the hourly RSI is oversold, but now start to shape a bullish divergence. What we could see over here, price action lower low, but however the RSI managed to shape a higher low, so indicate to us that yesterday's a strong push down, the downside momentum is losing downside is losing strength. Potentially we could start to see a form of consolidation taking shape in the dollar CAD over here. So I do not want to be so immediately flip to a bullish bias on the dollar CAD, given the fact that later I'll share with you all the WTI crude still it's still showing further potential upside potential, because short-term momentum is still pretty much intact in the WTI crude. So with that, due to the fact that it has a strong correlation with the oil prices in the last couple of 3 to 4 trading session, we'll rather stick to a neutral stance for today for dollar CAD, given the fact that downside momentum has starts to start to ease off, and as well as coming very close to our short-term support level that we highlighted yesterday. So neutral between 135.35 and 136.30 for today on the dollar CAD. Okay, so very quickly now, what's interesting on the cross pair over here is that for the cross pair, I want to highlight for you all is the Euro Aussie dollar. That means the euro versus the Australia dollar. So we could see that Euro Aussie dollar now is been trading in a short-term a medium-term downtrend, short-term downtrend channel since the high of 17th of August this year, and also trading below the 50-day moving average and the 20-day moving average. So a very clear, we call it a short-term and medium-term downtrend has started to take form in the Euro Aussie dollar. So what we could see over here is that yes, this morning it did a sharp spike down on the Euro Aussie dollar. RSI now bouncing off the oversold level. So potentially right now over here is that we could see a bit of minor bounce first towards 165.10. Maximum 165.60. So that was the 20-day moving average, I think, as a resistance as well, and also the former swing low area of 7th of August acting as a pullback resistance. So I'll be using 165.60 as a key short-term pivotal resistance. So as long as this minor bounce that may take shape due to the fact that the RSI has started to exit from the oversold level on the hourly chart, as long as the minor bounce didn't surpass this 165.60, potentially the Euro Aussie dollar could see a further slide to test the next support level at 163.60. So what's 163.60? If you go to the daily chart, very clearly, this is the swing low area of 28th of July and close that coincide with the swing low of 29th of September, which is this long bullish hammer that took shape on that day. So that will be the support level to watch out for in the short term. But however, if we start to see a clearance with an hourly close above 165.60, then potentially this short-term bearish bias, short-term bearish bias on the Euro Aussie dollar, the Euro Aussie cross rate will be invalidated to see a squeeze up to retest the minor range resistance that is in place since the start of October at 166.40 level. All right, one more interesting cross pair to watch will be the Swiss yen. So if you recall that for those who join us in our daily dose of market insights about 3 to 4 weeks ago, previously we do have a short-term bearish bias on the Swiss yen. So this short-term bearish bias on Swiss yen indeed hit that short-term support level at around 162.10, 161.35 level that we highlighted previously 3 to 4 weeks ago, and shaped that indeed start to shape that strong bullish reversal. So what we could look, okay, before I jump into the short-term chart of the Swiss yen, if you look at the long-term chart of the Swiss yen over here, so this is the 3-month chart of the Swiss yen. It's okay, sorry, not the 3-month. Yeah, so this is the okay. So this is the Swiss yen chart. The long-term chart of the Swiss yen is still going to be in a bullish dynamic over here. So overall, but in the short term, we are taking things one step at a time. So for the 1-hour chart of the Swiss yen for today, price action managed to actually start to shape a short-term uptrend motion since the low of 3rd of October. I managed also to surpass the 20-day moving average since last Monday. I managed to help above it since even the exposed NFP data. So I'll be using 163.60 as my key short-term pivotal support level to maintain this short-term bullish bias on the Swiss yen. A clearance above the near-term resistance now level at this 164.30 level, which is so close to the 50-day moving average. So potentially could see a first test at the potential to see a further potential up move towards the next intermediate resistance level at 165.20/164.60, which is the congestion zone of 8 of 8, which is the swing high of 8th of September, and as well as the 15th of September and 21st of September. So this is the intermediate resistance zone that to watch out for. However, if we start to see an hourly close breakdown below 163.60, then this short-term bullish bias condition on the Swiss yen will be validated to see a corrective slide to test the next support level at 162.70. So that's for the Swiss yen and the FX market. So very immediately, let's go jump to the WTI crude oil. So WTI crude oil yesterday, we call it West Texas oil. We do have a short-term bullish bias yesterday. So still maintaining that short-term bullish bias condition, but I will have a tightened key short-term pivotal support level, which was yesterday's close to yesterday's swing low area, and as well as the 50-day moving average that managed to help since yesterday's deep down in price action during the European session, but managed to recover thereafter. So 83.05 will be the key short-term pivotal support level to watch out for today. So still maintaining that short-term bullish bias condition on West Texas oil. A clearance above this near-term resistance level that managed to cap yesterday's up move at 86.60 level. Potentially could see a test at the next resistance at 88.60, which is also close to the 20-day moving average. I think that's resistance as well. However, if we start to see an hourly close below 83.05, then this short-term bullish bias condition will be in jeopardy, where the West Texas oil could see a slide to retest the former minor swing high area, this former we call it swing high area of last Friday turns into a pullback resistance. So in fact, this was actually the gap up on Monday. If you look at the futures pricing, so that will be 83.20 level on the West Texas oil. So now moving on will be gold. So over here for spot gold over here, what we could see. Okay, so for spot gold at this point in time, very interestingly, price action indeed start to shape a push up and hit the resistance level that we mentioned earlier on Friday and as well as on Saturday. On yesterday, it will be at 1860 level, 1860. So price action hit that level. So there's no clear signs of a bullish divergence yet in terms of the RSI level. Yes, RSI level hit the oversold on the hourly chart. So potentially we may start to see a bit of minor pullback. So I will use yesterday's swing low area as a key short-term pivotal support, a tighten one for today at 1844 to maintain this short-term bullish bias condition on the gold XAU/USD. To expose potentially seeing the next resistance coming in at 1880/18/85, which is this former minor swing low area of 21st of August, turns into a pullback resistance and as well as the downward sloping 20-day moving average. However, if you start to see an hourly close below 1844, a breakdown below it with hourly close below 1844, then this short-term bullish bias condition will be invalidated to start to see another round of potentially decline in first step to test the gap up area that was formed on yesterday, now turns into a support level at 1829. All right, so with that, that's pretty much sum up for today's daily dose of market insight. We come close to the 26-minute mark for today. So with that, have a great day ahead and we shall speak again tomorrow. Thank you. Mic test 1 2 3, test 1 2 3.